folks, Dan Frio here, the rate update. We're going to talk next about the jobs numbers, how they came out, and they beat numbers from about 50 years ago. And then we're going to talk about the yield curve briefly and how that's affecting our thoughts on the recession. And I'm going to post a video here just shortly in about an hour about all of that. It's going to be about a 45-minute video, but I think you're going to learn a lot because I did as well. So my name is Dan Frio. I do the rate update every day, where my goal here is to educate you and inform you on everything real estate, especially when it comes to financing. So if you like this video, please don't forget to subscribe down below, hit the bell, so every time I post a video, you get an alert. Let's get to it. So the reason why we discuss these numbers on a daily basis is this is economic data that is affecting yields on bonds. As we know, the MBS market is a bond that trades on Wall Street that is the biggest component of the mortgage rate. But also we follow the 10-year Treasury and the 2-year Treasury and a bunch of Treasury bonds as well to see what's going on with the yield curves, and are we in position for a recession. And my tune has changed in that area, and I have no problem saying that. And I'm going to post a video in about an hour that I think you're going to be really excited to watch. At first I'm like, okay, I know this. And then all of a sudden the analyst who was breaking down all the data, I learned a lot of stuff that I didn't realize. So I'm the first one to come out and say, hey guys, I was wrong in some areas. And the video that I'm going to show later this afternoon is going to explain all of this to you, plus more. All right, so let's get on to the news. You can see here that U.S. initial jobless claims, these are first-time claims for the person, fell to a 53-year low. You can see down through here, we're at a 53-year low, and we got a very, very, very tight jobs market. The next area we're going to look at is where the 10-year Treasury is, all right, versus the 3-year. And we now have the complete inversion of the yield curve. And this is an area where I also missed. And again, I do not have any problem telling you guys if I'm wrong, I'm wrong, and I'll admit it. All right, right here we see on the 5-year Treasury, we have a 2.7 yield. The inversion comes right here. If you go further out on a 10-year, so we have a 5-year Treasury. So thinking if you bought a 5-year CD, saying, you can tie up your money for 5 years and get a 2.7 yield. But if you tie up your money for 10 years, you get a 2.69 yield. Well, why would you extend out that term and lock in your money and get lower yield than you would otherwise on this? But we still have, look at the difference between the 5-year and the 30-year. It's basically the same. That's where we're seeing the inversion of the yield curve. These two areas, the yield curve, as well as the really, really, really tight job market, what you're going to find out is going to signal, yes, we are going to move into a recession Q4 of this year or Q1 of next year. But there's some good news at the end of that tunnel, so you need to watch that video when I post it later this afternoon. So we continue down this path. Here's the economic calendar for today, and the news was only the initial jobless claims, which we see right here. The expectations were for 200,000, and it came in at 166. So that even more than validates that we have a very, very, very tight jobs market. Okay, so how is all this affecting mortgages and mortgage? What effects it having on the MBS market? And again, here's what we have in the MBS market. This is a bond that trades on Wall Street that is the biggest component of your mortgage rate. The yield on this bond, you can see right here, what this represents is the price of the bond. So as this price goes down, rates go up. This is a pretty big number. Remember yesterday's video, I'm like, we were up like 2, and I'm like, okay, that's a normal market. But we've been seeing minus 20, 30, 60, 80. We don't like this number, okay? So this means or triggers us, yes, yields on the mortgages are going to go up. So let's extrapolate that into where are mortgage rates? Well, we go over here. You can see right through here. Let me break this down. This is mortgage rates that are published by Mortgage News Daily. These are not my rates. These are the national averages. Okay, so let's go across here. I'm going to use my lingo, and you'll eventually get used to my lingo, but I think you'll get it. All right, so we start out with a 30-year fixed rate. It's coming in at 4.97, down 11 basis points. Okay, that means it's down. That rate is down 0.11. Okay, it does come in with a cost, and you've got to make sure we're looking at the cost when we're getting these rates, because you don't want to overpay, especially in this market. So it comes with a cost of 0.4 in points. So if you extract out those points, we are well above 5%. We're probably about 5.125 at least, or 5 1/4. All right, so that's how we see this sell right here. So let's go across. We got the 15-year down 4 basis points, coming in at 4.24. We got the 30-year government loans, which is FHA and VA, coming in at 4.62. Down 6 basis points, no points there. Then we have the 30-year jumbo coming in at 4.3, down 10 basis points, and we have the 5/1 ARM, the adjustable rates, which are flat at 4.05. So there's still almost a 1 full percent spread right in this area here. The trend for today is very negative, and that is basically because of the bond markets, especially the MBS market that we saw here. And you can see it's been dropping all day long. So this is what we do on my channel every day to inform you what's going on with mortgage rates and why. So if you like my content, again, if you would, please take a second, smash that subscribe button, click the bell so every time I post a video. But if you're like, hey, Dan, I like what you're doing, I'd like to get a hold of one of you or either you or one of your guys. How do we do that? Well, just go to therateupdate.com. Right up here's all the information you need. You can call us, you can apply online, and you can even schedule a meeting. We also have a chat button, a brand new chat button right over here that you can chat with one of us at any time, basically up until about 5 or 6 o'clock at night, and we'll answer any and all the questions that you have. So thank you so much for watching. God bless. Have a great weekend, guys. I'll see you next week. Bye-bye.